We've seen a great couple of days on Wall Street, of course. As you heard Jane say, the Dow hit and passed an all-time high. But a lot of us are still unclear, what does the future hold? Both times the market was here before, back in 2000 and 2007. There were nasty corrections and recessions that followed. So we brought in an expert this morning. Joe Cryer is president of Cryer Wealth Management to discuss the good, the bad, and the ugly.
Hey.
Is there any more room, Joe, do you feel, for this bull market to keep going up?
I think it could potentially have legs. You know, you talked about 2000 and 2007. Back in those times, the world was quite a bit different, but the market is actually healthier now than it was then. In 2000, you had hysteria from the dot-com bubble. In 2007, you had the housing market hysteria. This time, you don't really have hysteria. You have a lot of nervousness, and sometimes nervousness is the fuel that a market needs to go forward. When you have speculative activity, that's when markets look toppy.
You're making me nervous saying that we're in a better position now, because I think a lot of people do not feel like they're in a better position.
Yeah, I should clarify that. You know, if you look at three parts to the U.S. economy, you have the federal government, you have households, and then you have corporations. The federal government's kind of buried in debt right now. U.S. households are still digging out from the worst recession from the 30s, but corporate America is pretty clean. You know, they've cleaned up their balance sheet, they've refinanced their debt. Unfortunately, the people they laid off 5 years ago, they've sort of replaced with technological improvements and productivity gains. So that makes corporate America the healthiest piece of the three legs of the U.S. economy.
All right, so then what's driving this? Is it simply that a lot of people have cash that they're storing up and now they feel more confident and they're getting back into the stock market?
That's a big part of it, you know, and the U.S. economy is showing signs of life. One of the big things right now is that the stock market seems to be the cleanest dirty shirt in the laundry basket, so to speak.
That's a good way to put it.
The bond market doesn't look all that healthy. You know, of course, global investing is a little bit tenuous, and when people look at track records for stocks, if they look at annual numbers, it looks pretty smooth. It has not been a smooth ride, but the numbers look pretty good when you look back there.
Hey, Kyle, in the back, I'm going to ask you to put up still number one so we can take a look at some of the other things that are going on right now.
This is a picture of the last 10 years of the market, and you can see those massive peaks back in 2000 and 2007. So a lot of people say, hey, we're coming up to that peak again. It could be a little bit tricky.
And right now, Europe and China are fairly quiet, which makes people feel a little bit more confident. The housing market, prices seem to be going up.
Yep, there's a little bit of lending going on, and if you know, Bank of America and Citicorp start lending a little bit more money, that could continue to spur this housing recovery.
And Ben Bernanke keeps funneling some money into the economy here.
Yeah, he's pumping large amounts of money in, so there's more dollars bidding for stocks. He's also keeping interest rates exceptionally low, and that's got a lot of stimulative action towards the economy.
And that's got a lot of people worried that we're going to have some blowout here of the bond market.
Yeah, there definitely is a flip side to this. There's risk out there, and I'll caution people that just 8 days ago, on a Monday or 9 days ago, the market was falling significantly, and if you put on any business channel, you would have seen a bunch of bearish people talking about all the negatives out there. So we can swing back to that pretty quick. I expect that in the next few days you're going to see a lot of positives. Don't get drawn into that.
Because you're right. I mean, a lot of people are waiting for the other shoe to drop. Some other things Joe says you should watch out for. Economic growth. How are we looking on that front? Not too great, are we?
It's not fabulous, but it's not as bad as it was a year ago. You know, unemployment is persisting here, and of course the federal debt over $16 trillion. That's something that sooner or later is going to come back to haunt us. And of course the global situation, as we mentioned, Europe and the Mideast is quiet, and China has been okay, but summertime things tend to heat up over there, both politically and temperature-wise.
All right, Joe Cryer, president of Cryer Wealth Management, here to talk more about the bull market we seem to be in, but with caution.
Definitely.
Yeah.